Okay, what we're going to look at now is do some playing around with the balance sheet. Let's begin with what was explained in the unit, the concept of capital gearing. Now I'm going to enter into cell H19 the words capital gearing. And if you remember, capital gearing is equal to the amount of long-term liabilities, in this case, is the sum of the mortgage and the bank loan divided by the total financed by. And we get this figure 0.53957. I'm going to format that. So going to the top of the screen using the home menu, we get the ribbon, and there we have a percentage style. Click on that. We can see that the capital gearing is 54%. Now, similar analysis, we can look at the working capital ratio. So I'm going to type in working capital ratio, and that is equal to the total current assets equal, so the total current assets divided by the current liabilities. And remember from the book, we're looking for a figure of between 1.5 and 2, so that satisfies our requirement. It's good figure. The acid test ratio, this is how you build up a formula, is exactly the same, except we don't include inventory in the current assets. So that's equal to, I'll open the bracket, the current assets minus the inventory, close bracket, divided by, it's a backslash symbol, the total current liabilities, and there we get the figure 1. Well, you can see that I seem to have an error there with the format. It's dollars, but I don't want that. So right click, format the cells, set it as a number, general, that's a number. I think probably better to 2 places of decimal, and I think that will more than satisfy our needs. I'll do exactly the same up here, format the cells, set it to number, 2 places of decimal, and there we've got our working capital ratio, acid test ratio, less than 1, so not ideal. Let's play around with a little bit of formatting again. So remember, if the acid test ratio is less than 1, then that could spell danger. So again, conditional formatting, highlight the cells. If it's less than 1, then we can choose what colour we want. I'm actually quite happy with the default. So click OK. Okay, now let's play with some data. Let's imagine that we're going to sell some more shares. Now what I like to do is I want to sell another, this is different to the scenario in the chapter, 5,000 shares. We'll say for $1.50. 5,000 shares for $1.50. Well, we now have 35,000 shares. So I'm going to change that number to 35,000, but you can't change the nominal value. So 35 lots of $1 is 35,000. But you've got to ask yourselves, well, hang on a minute, what about the fact that we sold them for $1.50? So we've actually got not just 5,000, but an extra 2,500 to add to that. Now the sum's correct. The shareholders' funds will indeed be 45,899. Now you can see that the capital gearing has now dropped to 50%. But what do we do with this 2,500? Well, we call that share premium. In other words, we sold the shares for more than their nominal value because the market allowed it. Now this figure's in red. So what it's saying is that the figure's no longer balanced. So I'm going to have to ask us, well, what do we do with the 7,500? Well, for now, let's put it in the bank. So 7,500 plus 1,500 is 9,000. There we are, we're back in balance. So one side says we raised share capital, and the other side indicates that we've placed it into the bank. Well, what are we going to do with all this cash? We've got a very, very healthy working capital ratio and a wonderful acid test ratio. But let's suppose that our computer now desperately needs either refurbishment or maybe some addition. So what we're going to do, let's spend an extra 2,000 on the computer. So our computer equipment is now, say, for argument's sake, 4,500. That's an extra 2,000 we spent on the computer, which means we've got only 7,000 left in the bank. We're still in balance. Okay, let's take the thing further. Let's suppose that we use some of that newfound cash to pay off some of the bank loan. Let's say, for argument's sake, we use 3,000 to pay off the bank loan. So that brings our cash at the bank down to just 4,000. And the bank loan now comes down to 7,000. So look at the capital gearing. We've raised share capital. That brought the capital gearing down. We've used it, some of it, to pay off the bank loan. Our working capital ratio is still looking very good, so we might be tempted now to spend some more cash, say, on inventory. So let's spend an extra 1,000 on inventory. 1,000. Bringing the cash down to 3,000, but the inventory up to 4,000. Now the working capital ratio stays the same, because the working capital ratio includes inventory. But the acid test ratio has come down a little. But still, these figures are looking quite good. Now, we can go on playing with these numbers and using these scenarios for hours. At the end of Unit 1, there are exercises which will suggest you do exactly that. And from there, you'll then be able to test whether in fact you've got a good understanding of how all this operates. Anyway, that's the end of the video tutorial for this unit, and good luck.